Hello, my name is Dan Gordon, and I've been working with my team at the Berkman Rhodes Institute at Tulane University's Freeman School of Business to analyze the McMoRan Exploration Company. My team consists of William Kazoon, LaCour Miller, Iza Shabazz, and Shiv Tukral. We are pleased to present our findings regarding McMoRan, its latest developments, and where we believe the company stands. McMoRan is an independently traded company headquartered in New Orleans, Louisiana, that engages in the exploration, development, and production of oil and natural gas in the offshore shallow waters of the Gulf of Mexico and onshore in the Gulf Coast area of the United States. On the screen here, you can see a 5-year trajectory of McMoRan's stock price. As you can see, in January of 2009, the stock price hit a low point and then went on a general upward trajectory ever since. But on March 24, 2011, the stock reached $17.66. Let's move on and look at the industry outlook for oil and natural gas. Recent political unrest in Libya and Egypt forced prices of oil to cross the $100 a barrel limit in March of 2011. We anticipate that oil prices will average $101 a barrel in 2011 and 2012, and that this number will be reduced going forward. Natural gas prices are expected to rise in the coming years. The Henry Hub spot rate for natural gas is expected to reach $4.16 per BTU in 2011 and $4.58 per BTU in 2012. The higher price is a result of increased industrial demand, and as the economy improves, we anticipate demand will increase as well. According to the Energy Information Administration, which is also the source for all of these figures here, world liquid fuel consumption is expected to grow by 1.5 million barrels a day in 2011 and by an additional 1.6 million barrels a day in 2012. The primary increase in demand is coming from China, Brazil, India, and various Middle Eastern countries. Industrial consumption of natural gas is projected to rise 1.67% from 2010 to 2011, and total consumption is expected to rise by 1% in 2012. Let's take a look at McMoRan's recent developments and future projections. On December 31, 2010, the company completed their acquisition of the Plains Exploration and Production Company's assets in the Gulf of Mexico. Keep in mind, this was an acquisition of their assets and not an acquisition of the actual company. With this acquisition, McMoRan obtained an additional interest in the Davy Jones field of 27.7%. They also obtained interest in Blackbeard West and multiple other assets. Ultimately, McMoRan obtained all of PXP's assets in the deep and ultra-deep explorations in the Gulf of Mexico. To facilitate this acquisition, McMoRan issued $900 million in debt to use for this acquisition and development. In addition, the company anticipates spending roughly $300 to $500 million for capital expenditures in 2011, and depending upon the level of their success, they will spend more money on capital expenditures going forward. The more successful they are, the more money they're going to end up spending on capital expenditures. McMoRan currently has 276 billion cubic feet of proved reserves, and the company is consistently working to increase their production of oil and natural gas. The company has a major find in the ultra-deep discovery of Davy Jones. This is one of the most substantial assets that's been found in the recent years in the Gulf, and the company is currently drilling Davy Jones number 2, and they anticipate the completion and flow tests of wells 1 and 2 to take place and be done by the end of the year 2011. If they're successful, the company plans to bring these wells into production shortly thereafter. And again, if they're successful with their flow tests, McMoRan will be able to add approximately 2,400 billion cubic feet to their proved reserves. Other substantial assets that McMoRan is working on are Blackbeard East and Lafitte, which is an ultra-deep site. There are plenty more assets they're working on, but there's simply too many to discuss today. Moving on, let's look at their peers. On the screen here, you can see the top 5 peers that were selected to analyze McMoRan's performance in the business of exploration, development, and production of natural gas. We considered other factors such as similar market capitalizations and positions within the market as we're looking at these companies. Compared to their peer group, McMoRan has the lowest debt-to-equity ratio, and this signifies a low-risk profile compared to their peers. One other key thing to point out that's interesting is that McMoRan has the highest market capitalization amongst their peers. Moving on, let's look at their shares outstanding. McMoRan currently has 157 million shares outstanding and a free float of approximately 45 million shares. Another important thing to discuss is the key management of McMoRan. The company is run by James Moffat, who is also the company founder. He's the driving force behind McMoRan. He has surrounded himself with an experienced team in the oil and gas industry. This company has a tremendous amount of experience in the Gulf, and we believe that they're positioned very well to continue their growth and development of the company. While looking at McMoRan, our team met with management at their headquarters in downtown New Orleans. Although we didn't visit any rigs, we were able to talk to the company and learn about where they believe their company is heading. If I had to use one word to describe the attitude of the McMoRan team, it would be optimistic. The company is excited about their Davy Jones and other deep and ultra-deep plays. The company expects that Davy Jones is really going to bring them to a new level, and they anticipate that if they're successful, that they will have the opportunity to obtain funds at levels that they're not able to obtain today. So they'll be getting credit on better terms, and they'll be able to use the cash flows coming in from the Davy Jones field, if it's successful, to facilitate growth and development of their company. One concern we had going into the meeting was what would happen if natural gas prices were to drop from their levels of today. They have a low break point of $2.50 per million cubic feet of gas, and this is what the company explained to us. And the reason that this is low is because they have high operating synergies. We don't anticipate that natural gas prices are going to drop down to the $2.50 level or below there. So ultimately, we don't have any concerns that McMoRan would not be in a position to continue their natural gas projects. To value McMoRan, we used three major methodologies to develop our 12-month target price. These methods were the net asset value method, the discounted cash flow method, and the price per book value per share. Ultimately, we chose not to use the discounted cash flow method because the company does not have consistent cash flows, and using the discounted cash flow approach would not yield an accurate result. Again, with the price per book value per share, we chose not to use that method because there is a great deal of capital expenditures, and the book value may not accurately reflect the market value of the company. To determine the value of McMoRan, we used the net asset value, and using that, we determined a 12-month target price of $18.87. Our team rates McMoRan a market perform, and we believe in 12 months' time the stock price will be worth $18.87. Thanks very much for being here with us today, and we are pleased to present our findings to you. The Burke & Road reports are produced solely as a part of an educational program at Tulane University's A.B. Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decisions. You should consult an investment professional and/or conduct your own primary research regarding any potential investment.